For those of you who missed it, as we were asleep last night getting ready for the start of our trading week, the Chinese stock market went absolutely bonkers to the upside once again. And as you're about to see, the Japanese stock market went actually completely the other way. The upcoming week is going to be a crazy one. Not only is this the start of a new week, but it's the start of a new month. And as we're concluding this past quarter, getting into a new one, we're going to see a lot of big changes in bets. So check this out. The CSI 300 index up 24% in the past 5 days. This was one of the major indexes of China, and it didn't stop there. Breaking, China's central bank tells commercial lenders to start cutting rates on existing mortgages. So unless you've been under a rock and maybe you just kind of missed all the stimulus that China's doing, it's in the realm of about 140 to about $280 billion, and it's a two-prong attack. Prong one relates directly to the stock market. They're basically saying, hey, banks, the amount of money you need to have in reserves, we're going to lower that. That freed up about $71 billion worth of liquidity to go into the stock market. And on top of it, what's being referred to as like kind of a swan program, there's about another $40 billion that they're saying, hey, corporations, we're going to give you a dirt cheap rate if you take this money and buy back your own stock. So as this was all happening, they're like, cool, that's prong one, obviously a direct stimulus to the stock market. And it was also helped by the fact that they're cutting all these loan rates on the shorter, longer, all that stuff. But also in the world of mortgages, they're saying, hey, the interest you have to pay, we're going to lower that. We're going to lower the minimum requirement, especially if you're going out to buy your second house. So from the world of the stock market and from the world of the real estate market, China is coming in as dovish as they possibly can. Lots of stimulation, which is causing the market to go so high, so crazy that there's so much FOMO that they're having like literal like glitches and just like the amount of excitement, the amount being traded. I think we're breaking a 2-decade record. The gain itself in such a short time period is also breaking a record. I mean, this could only be described as FOMO. Check some of this out right here. Shanghai up plus 8%, almost 11% on the component. China A50, 7%, and the Hang Seng up 2.4%. So it's across the whole board that they're absolutely crushing it. And it's, I mean, by all definitions, it's literally prompting FOMO.
Robin, we want to get to you on really a question that a lot of people have been asking in the measures that have been announced so far and what's sort of been signaled to come. Do you think that this is a whatever it takes moment for the Chinese economy?
Well, I think the pivot is big. It marked a significant change in Beijing's mindset to fight deflation. So this is the first concerted effort to fight deflation. However, it may not be the whatever it takes moment yet.
Those are huge
For that whatever
gains.
it takes moment, I think we need to monitor the perceived social risks. And we built something called the China Social Dynamic Indicator. It is approaching the trough level we witnessed, say, in late 2022 when China reopened from COVID, or in late 2015 when China did a massive stimulus on its housing sector. We are approaching there, but not there yet. So I do think this is the start of something, but for something like $1 trillion decisive stimulus, we are not there yet.
What's missing, Robin?
Fiscal action. So they did concerted efforts on stock market, on monetary easing, but we need a central government to expand its balance sheet, because a lot of investors will compare today to November 2022, the big pivot towards reopening.
Yeah.
The mindset change is very similar. However, the approach will be different because reopening from COVID is a 1-2 punch. You just allow people to move, they will move. But today, from persistent deflation to reflation, you allow people to buy house to spend, they may not spend.
Yeah.
You need the central government to boost consumption, to provide social welfare. We are waiting for that.
We're going to show the social dynamics indicator that you just mentioned, right? So you talked about we're getting close, but not quite there to those policy pivots that we saw back during COVID, back during, I believe, 2016 timeframes as well. How serious do you think, though, this time around is China about tackling some of these structural issues?
I think it's very serious. Basically,
Clearly,
if you look at
they're
the
very
indicator,
serious.
it's based on things like unemployment,
Yeah.
Talking
on wage,
1 to 2
on social
trillion
benefits,
yuan.
on labor incidents. So I think this is because Right now, China is feeling the heat of deflation. Revenues are down, local governments are struggling, jobs are on the line, so it's a wake-up call. That's why they made this pivot towards reflation. However, reflation is a long, bumpy journey.
Yeah.
They have to do probably a lot of a trial and error approach because they have to shift from supply, infrastructure stimulus, to demand on consumption, on social benefits. These approaches are new for China. They were not familiar with these approaches. So I don't think they can upsize this stimulus to, say, $1 trillion next month. They will probably start with smaller actions, 1 to 2 trillion RMB. If it failed, they will continue to upsize.
To put that in layman's terms, over the past 1, 2, really the better portion of a decade, but over the past handful of years, we've had very serious problems in China. If you looked at their stock market, if you've looked at their real estate market, it's lost a considerable percentage to the point that they were facing deflation. The government stepped in and said, hey, we need to battle this deflation, prompt some excitement, and that's exactly what they're doing right now. So, okay, right there, there's most likely going to be an upward trajectory in their local currency, the yuan. There's most likely going to be an upward trajectory in commodities, and probably if you look at some secondary, tertiary things, probably these higher end luxury brands in Europe will also see an upward trend. But I do want to be clear, it's not rosy for everyone. The Nikkei down 4% overnight with strengthening yen. So we're seeing some crazy things go on with the USD yen pairing. We're seeing crazy things going on in their equivalent of the S&P 500. And also a lot of this is all being tied together with their whole new prime minister. So yes, certain Asian countries such as China is now ripping, we're breaking records, and other countries not so much. So what does this mean for the US? Bull market enters fourth quarter with just about everything going its way. There's a lot going on right now. And granted, today itself is going to be a little bit crazy. And the reason I say that, I hope you're watching this in time, there's a gigantic call position expiring at 5,750 on the SPX. This is from JP Morgan. It's their caller position. This is providing a ton of positive gamma. So as soon as this disappears and the expiration date is today, it's going to take the wet blanket off the stock market. So I think volatility is about to return. Now, which way might it go? Well, from a seasonal perspective, the start of October is bullish and then very quickly turns bearish, then it bases, and then we get kind of a somewhat of a muted bullish push for the remainder of the month. And then November's noteworthy in terms of being bullish, and then so is December. So obviously that's some seasonality. I don't think it's the end all be all. It's not a guarantee. I just want you to know the generic turn of this, especially because in October, a lot of people associate it with being extremely bearish, but in reality, that's not true. Yes, of course, bad things have happened in October, but if you look at all Octobers, it actually does pay more to be a bull. Now, this time around, to start off the new week, to start off the new month, to start off the new quarter, the thing that's going to be happening really to kick it all off, a lot of it's going to come down to the chairman of the Fed, Mr. Jerome Powell. He'll be speaking today right around 2 p.m. Whatever he does or doesn't say, is he hawkish? Is he dovish? How convincing is he? I think that's going to be really setting the tone for the next couple trading days. So obviously, I highly recommend you pay attention to that. And then don't forget, we're also getting the JOLTS reports. We're also going to be getting some ISM numbers throughout the week. And then on Friday, it's the first Friday of a new month. So we're going to be getting the unemployment numbers. So yes, I get that this seasonality is generically bullish. I also get that the market's strong. I get that China's doing wonderful, but just to be the devil's advocate, we see that Japan is not doing so well. So really in the US here, I think what's going to come down to is the unemployment report, the JOLTS report, the ISM numbers, and more specifically what Jerome Powell does or doesn't have to say. But with all that, I just want you to know that we are within spitting distance of hitting another new all-time high.